My name is Yiping, and I'm with IOSG. So we are one of the earliest and also largest crypto fund from Asia. And now we're deploying our 50 million this year, mainly in the liquid and also venture markets, bullish on the institutional adoption and also AI and crypto. And we have amazing panelists here, so we can start from.
Hi, I'm Will from Zero G Labs. We are building and have built a decentralized AI network. I probably should have been on the last panel, actually. Had quite a few good answers for those questions. Don't know so much about DePIN, but I was just saying to my friend there, I do run helium miners at my house, so hopefully that qualifies me as being an expert in DePIN, but we'll see.
Hey everyone, good to be here. My name is Renee Davis. I'm the CEO and founder of OpenMatter Network, which is the privacy layer for the agentic economy. We make it easy for agents to transact on chain with MPC securing the data sets that they transact with.
Hello everyone, my name is Anna. I am head of operations and governance at RARI Foundation, and we focus on supporting Rarible protocol and RARI chain. Rarible is an NFT marketplace and a place for digital assets for creators, and we also do treasury management and governance execution. Thank you.
Hey everyone, my name is Dylan. I'm a enterprise research analyst at Messari, where I cover a lot of DePIN. Excited to be here.
Hi everybody, my name's Alec. I'm the Chief Operating Officer at Spexi, one of the co-founders of Layer Drone, and we're a drone imagery network, the largest standardized imagery network for drones in the world. And so it's sort of like Uber for drone pilots. Drone pilots can download the app and contribute standardized data to the network, which is then sold to companies. So thanks for having me.
Hey everyone, I'm Scott Foo. I'm the CEO of Orbital Beam. We are a network intelligence-based consortium. The Web3 side, we work with tons of real-world applications, robotics, DePINs, cool projects like Layer Drone. And then the Web2 side, we help enterprises from Montessori to even the Jimmy Kimmel Show with all types of emerging technologies from AI. And if there is a blockchain rail, we will push that as well. But excited to be here.
Yep. Thanks for the intro. I think DePIN is super cool as we move more into the fundamental. We look more on the fundamental for the crypto project, and DePIN can always solve the big problem, right? For the real capital intense problem, we can leverage people's connection, people's resources to build it, and it is global, across continents. I think the first question is, what qualifies as decentralized infrastructure? What is the definition for that? Are we talking about the compute, storage, bandwidth, physical stuff, or are we talking more about something virtual? What is the most powerful one? Alec, do you want to pick up this question?
Sure. I think it's a fairly broad definition, but the infrastructure needs to exist and function in the physical world and produce something that people want to buy. I think that's a really important part of the definition of decentralized physical infrastructure is the infrastructure needs to produce something that people actually want to buy and use and generates value for the world. So I think decentralization is something that is a moving target. If you look at what's been working in crypto, it's not necessarily the most decentralized of applications. For us, our network is a bunch of drone pilots that contribute data to our network, and they're decentralized by nature. They're all over the place, and they're permissionlessly contributing. The infrastructure itself on the blockchain is decentralized in a way that we're building on Base, and although I wouldn't say Base is the most decentralized blockchain, but I think all in all, we look at what's the minimum viable decentralization until the network or the company can get profitable and successful. And so, really trying to just build a business that makes sense and then work on what's required for decentralization.
Is there any comments? You guys want to comment on Alec's answer?
I think Alec clicked on that one. No.
You want to say something?
I think when I think of DePIN, I at least think of having some kind of physical infrastructure off chain and a reason to put data back on chain, right? Whether it's for orchestration of the network, for validation of some work that's been performed to be able to distribute rewards or incentives or something like that. So I think of the physical component off chain, but then having a requirement to actually do so on chain as well. Okay, yeah, and yeah, I think the early DePIN networks maybe were trying to do on-chain work.
Might have put down your beer. No,
not putting down the beer. No way. Yeah, I think the earlier kind of DePIN networks are doing everything kind of on chain, right? And there's been maybe more of a move to do less things on chain, to do more of the stuff kind of at the edge on the nodes themselves, and then just push the kind of minimum attestations on chain. At least that's been my observation.
Oh, yeah, I think the data is kind of an interesting observation, as I think people are trying to extract more value from the data. And if the data is on the blockchain, it's just easy to sell, easy to doing all the management.
And yeah, just a quick cherry on top to kind of what Alec was saying about the data. If the data set is not worth anything in Web 2, there's a big chance it's probably not going to be worth anything in Web 3 with the token attached to it. So yeah, I just wanted to add that part into it.
Yeah, I think also Alec mentioned about building the real business, building a network that people want to spend money on, want to buy. So what are some real indicators you guys are looking at when evaluating the DePIN projects? What's some indicators they show the sustainable demand? Anyone want to start with this question?
I can start. I mean, it's only as good as it is easy to sell, I think is a good place to start. So does the data or the service that these networks provide make sense from a business perspective? Tokens can incentivize participation only for so long until there's revenue to sustain that activity. And so for us at Layer Drone and Spexi, we produce ultra high resolution standardized Earth imagery that we can sell to governments, insurance companies, tech companies, AI companies, and it's a layer of data that's not existed before. And so it's creating this net new data set that the world has never seen over urban areas. And that provides value for lots of different kinds of companies. And so when we think about success, we think about revenue, of course, we think about users, we think about how many people use it. And when I think about other DePINs, I think about, is the juice worth the squeeze? I think less about is it as passive as possible? Is it something that people will just do because they want to? But do the incentives match the value? Is the juice worth the squeeze? And I think if that makes sense from anyone looking at it, then it's probably going to be successful.
I'll answer from our consortium standpoint. So we look for sector standalones. So obviously Layer Drone, like Alex said, no one's doing what he's doing and they front run so far ahead. Good luck starting today and trying to catch up. Another company we're really bullish on that we work with is Wingbits, hyper-local aviation data. Another company where there's 2 or 3 companies kind of copying and mimicking what they're doing. But, Wingbits, they have, a deal with Korea Air, a few other ones that are going to announce that are Fortune 500 companies. So again, a sector standalone in the aviation space. So these are the kind of companies that we select that we want to work with at Orbital Beam.
You want to say something?
I'll say something. Yeah, I agree. I think revenue is by far the strongest metric of indicating demand. And I think verifiability of that revenue also matters a lot. So is it on-chain revenue? And then even then, you need to make sure that it's actually going to accrue to the token holders in some capacity or has the ability to one day. So I think that's a lot of, we don't need to get into this now, but a lot of the debate over buybacks being the ultimate verifier of revenue. And other methods through that. But yeah, revenue is definitely the most important.
Yes, I would agree that it's paid customers and also renewals, because if someone is willing to pay for your service when they don't have to, it's real indicator that it's useful. And if the customers are willing to stay and put your infrastructure as part of their workflow, it also means that that it's sustainable and it's needed in the space. And about others indicator like usage rate, from the operations and governance standpoint, I work with DAOs and I know how incentives kind of work. And so you can bootstrap the project and create great activity and great numbers on a dashboard with usage rate. But then when incentive drops, the usage also will drop if the project does not have any value. So you need to look only at usage when it comes from external partners, and if it's consistent when you don't have any incentives anymore. And about the concentration, I would think that it's also an important signal, because if all of your users come from like 2 or 3 big projects, it also means that the infrastructure is still fragile. So it's better when the project has smaller users, like slower growth, but it's consistent and predictable.
Yeah, I think that's a very good point. Similar to a point I was going to raise, is that you need kind of elasticity of the network. So as revenue grows and demand grows, you need to be able to add resources and nodes easily. Obviously, there can be real world logistical issues with that, right? With supply from, especially if you're using specialized chips and things like that, can be long lead times. But as elastic as the network as possible, I think that's definitely a positive. DePIN networks are kind of like an analogy for real companies in a way, right? And if you run a website and you're having a lot of demand on your website, you just spin up more resources on EC2. But also, if people stop using your website, if it's like not a very busy time of year or something like that, you can shut the resources down as well. So you really need elasticity in the network to actually be able to offboard nodes as well, which is something that I think in a lot of design for DePIN networks isn't really taken into account. They only look at growth. They don't consider that you might actually have to reduce demand as well.
Yeah, I think you bring a good point on the elasticity of the network, right? But then, like, how to make a really healthy like tokenomics, or really about the unit economies. Like people are incentivized to operate the node, but then you have this elasticity. No one is paying that, but it's still like people are incentivized to give some like surplus of the supply. Anything on that?
I was just talking with your.
Yeah, I think it really depends on the type of DePIN network as well, right? If you're using general purpose like computing, it's maybe easier to then use the additional resources and put them towards something else. If it's something very specific, like drones, for example, I imagine it's probably more difficult to use that additional load somewhere else.
You guys want to add something? You guys agree? I want to add something here. Dylan, Anna? Okay, cool. And then I think Dylan also brings a point on the volume, right? You talk about there are some volume it's washed. This is because of the incentive. The network looks better. So when you do the calculation, when you do the analysis, how do you like separate that from the real usage?
Yeah, I would say for most DePINs, it's actually pretty difficult, if not impossible. A lot of DePINs just aren't generating revenue yet, or are pre-revenue, so there's not much you can go off of. And then, there are a handful of DePINs that are doing watch trading or more circular type flows, where it's going from wallet to wallet, either affiliated or owned by a member of the protocol. So I think it is one of the biggest problems. Like A16Z put out a research paper, and they, like you said, they couldn't figure out how to solve the verification problem here. But I think like the only real concrete way is buybacks, because that's revenue that has to be spent. That said, I'm not personally a huge fan of buybacks, but if you want to verify revenue, that is probably the best way to do it. I think the bigger question is when DePINs are, generating 6-figure revenue or low 7-figure revenue, like does revenue verification matter that much, or should they scale more before we start worrying more about value accrual and how much faith we have in long-term token accrual, value accrual.
Anything else our DePIN founders want to add on this topic?
Yeah, I mean, you want to see revenue and you want to trust the project. And so how can you verify that? I think there's ways that projects and protocols can do that in the way that they track the service or the data that they produce. How is that being consumed, and can that be tracked on chain so that anyone can verify it, that there was some exchange of value for that data? I don't know that the market needs that revenue, especially in the early days, to be used for buybacks or to burn. If you think about a company that's at a Series A stage, maybe they've raised $10 million and they're growing, the last thing you'd think is that an investor would want any any revenue to be used to buy back shares. The investors would say, no, 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 keep your money, grow, reinvest in growth, reinvest in growth, reinvest in growth. I love that you're generating revenue. Don't lie to me about your revenue, but use it for growth. And I think that's something that we can emulate in DePINs. As long as the revenue is verifiable and we can all agree that there's an amount of revenue, then why wouldn't all of the token holders want that revenue to be used to grow, to get to the next stage so that the company can really start generating serious revenue numbers? I think there's a good school of thought that like once the protocol is generating or the network's generating enough revenue, that some of that revenue should be used to remove some of that supply. Maybe it's via burn mechanism, but it doesn't necessarily need to happen right away. I think we've seen some examples of that, and I don't know that the market's reacted that well to it so far. So it's still early, which is good. There's still lots of room to grow, but I think, we look at it as really, is the revenue verifiable? And if so, what's the best use of that revenue? And I don't think we're convinced at Layer Drone that it needs to be used to make tokens go poof.
Yeah, I know there's another question similar to this, like what Dylan was saying. We'll get into it later, but I completely agree with Alec and Dylan. I just, being from Silicon Valley, just like Alex said, if I went to any of my clients and I'm like, yo, we're going to take all this revenue and buy back shares, I probably would never have a consulting job again in Silicon Valley. But for some reason, Web3, everyone always looks to Hyperliquid or this one or two North Stars. And then they go, oh, we're going to implement the same thing and it's going to work here. And like Alex said, we can pull up all of these charts. I'm not going to call anybody out, but most go one way, so I would like to see some different things tried out. This is why we're in crypto. Maybe there's two tokens, one on the government side and one for everything else. Or maybe some of these founders, I've talked to you about this, Alec. Instead of seeing how many tokens we can give out day one, let's try to do this with the least amount of giving out, because what you see with these, even these layer one specific DePIN networks, when those VCs unlock, you see that Wall Street bets guy jumping off the cliff, everyone starts leaving the company, the pressure is too much, and it doesn't matter if Tom Cruise or anyone else is using this DePIN network, everyone's going to sell the news. And it's just like this conundrum that we're kind of stuck in. And Dylan brought up a great point. A16Z was even like, what do we do here? But I think, with all these big brains, we'll end up figuring it out. But I would love to see some of these founders try something new. Obviously, if your token's already live, there's no hot tub time machine to go back. But yeah, I really would challenge some of the new founders to try something, try some S-word and figure it out.
Well said.
Yeah, I think you're touching on something that I was hoping we would get to, so I'm just going to jump to it now. Is tokenomics in DePIN. I think this is probably where we've fallen the farthest is on tokenomics. We've optimized for supply side dynamics and not demand side dynamics. And you get a lot of situations where if the utility that's purported is not actually manifesting, there's just a ton of sell pressure. And you have, you saw this a lot in decentralized compute, where we just have like these crazy supply networks and just like no demand and people just start dumping the token. So I think, one of the things we're doing in OpenMatter with our token, we're lucky that we're pre-launch on the token still. So we've got our testnet out and our product out in private beta. And we're, thinking through how we want to do a DePIN token right. And we actually have tied our emissions to profit. So, and we do that in a quadratic function way. So we call this quadratic emissions rates. And basically what this is anytime there's profit or revenue that's created on chain, new tokens are emitted. But the relationship between how a token is emitted and the profit is quadratic, such that it follows an inverted U shape. So it doesn't infinitely scale linearly. There'll actually be a diminishing return, so that when you're hitting optimal targets of profit, you're yielding optimal amounts of emissions. If you have excess profits, your emissions actually decrease to combat excessive emissions. And we think that more tokenomics models that rely on profit mechanisms as the main lever on when to or not mint new tokens is gonna be a big way to get through a lot of that supply side dynamic issues.
See, the big brain's already figuring it out. I love it, man. Interesting.
Yeah. Cool. I think another question here. I think we mentioned about the DePIN company. They are more serious, and then we are also talking about the Wall Street. So how to really make this DePIN projects really like readiness from the institutional levels? How to make this into something like some matrix these guys could understand? These guys willing to buy these DePIN tokens.
I think like most things in crypto, you see things get more abstracted over time, right? With perps and like synthetic assets and stuff like that. I think we'll probably see a similar thing with DePIN projects, that instead of just being, individual retail customers that are like speculating and investing in these projects to give them enough funds to actually start building the network, you'll see kind of like blended funds and things like that of different DePIN networks, and it'll just become a synthetic asset that you can invest in without even having to know the underlying networks themselves. So I think that's kind of like the other side to the coin to what you guys are talking about here, right? What do you do with your excess revenue, basically? Do you burn tokens with it? Do you go just invest in the S&P 500 or something? Do you whilst you're... Yeah, exactly. I mean, there's a genuine argument to do that, right? To diversify and to maybe to reduce the risk of the network itself. On the other side, you can bring revenue in a similar scenario, right? If you need to expand the network, let's say the revenue is kind of going down during a bad period of the market or something like that, you can take more revenue in from some kind of fund or pool that you manage as well. So I feel like on both sides of the equation, you could have tie-ins to other types of DeFi protocols and use some kind of clever maths. It sounds like some clever maths. Maybe you'd be able to design this much better than me, but I feel like it's kind of like the same different sides of the same coin, that you can tie into different protocols, traditional stock markets and things like that, and just reduce risk that way.
Okay, cool. I think almost the time. Last question here. It's 2026. What are some biggest upside you guys are looking for this year?
I love this question. And I always say the same thing. So obviously, other than my clients, I'm really bullish on owning robotics, like tokenized robotic labor arbitrage. We saw what Figure is doing. They're going to go retail. Anyone that goes to Token Singapore, every corner has that orange juice machine with the 3 oranges, and the same company owns them all. So I would like to see more machine DAOs crowdsourced. We all own a piece of these, orange juice machines or vertical farms, and we check our dashboard every month or 60 days, and we see our revenue share from this. So yeah, I really want to see more DePIN robotic machine DAOs. Yeah, I'm really bullish on that.
I like that. The orange machines.
Yeah, or the coffee arms in silver.
Okay. I don't know if I have something that exciting. I mean, I'm looking forward to just like a reset in 2026 in crypto a bit. I think like everyone's trying to figure out what this next cycle means for these networks and the models and the tokenomics and what is going to actually work and generate value for everybody involved. So we haven't really seen it yet in DePIN. We've not quite found that. And I'm hoping that this year, this reset of correction and, it's cycling of people that are thinking about this differently are going to help to bring some clarity. I hope we're one of those. I think we're on our way to do it. But yeah, I'm looking for clarity in 2026. That's what I'm excited about.
I guess this is a bit more DePIN adjacent, but we're starting to see some uptick in activity, what people are calling InfraFi, which is like lending on-chain, or basically connecting on-chain capital to off-chain infrastructure, and sort of private credit type of manner. So we're seeing USD.ai try to do this with GPU-backed loans. They might be launching next few months. Daylight is launching DayFi, which is going to do that with solar and power purchase agreements, and that's looking very exciting. We even saw Aave, the founder, announce that they kind of want to move towards financing solar panels in the long run. So I think this could actually do a lot for DePIN. It could drive a lot of capital into infrastructure future and help grow networks if it's adopted in the right way. I think this could be one of the defining trends of this year.
Hey, Dylan, real quick, that could be collateralized, right? Like,
Yeah.
See, yeah, I'm so excited.
Exactly. So there's also composability down the road, which could be very exciting.
I think I am excited about that DePIN actually becomes more competitive with centralized solution, and users even or companies that are not in Web3 actually start preferring decentralized infrastructure and solution because it just becomes better in terms of being more reliable, transparent, and have bigger geographic reach.
I'm excited for DePIN to get more privacy-centric. I think you're going to see the privacy layer of DePIN become more important, especially as agentic commerce becomes more common. Users are going to want to have permissioned systems to grant or not grant access to data sets. So I think we're going to see a lot more privacy primitives in place in DePIN projects. We're going to see cybersecurity and post-quantum start to become more relevant.
I'm predicting a perfect convergence of DePIN, robotics, DAOs, DeFi, and AI. So we're just going to perfectly come together in a few months' time, and we're going to live in bliss forever on. I think like realistically, like the AI steam train is kind of unstoppable at this point, right? In outside of Web3 even. The stock market reflects that, right? So either AI is going to continue to go full steam ahead, or the world is going to collapse essentially, right? Because it's been priced in already. So unfortunately, that's tending towards centralization, right? That's why I work for a decentralized AI network, trying to change that. But what's kind of happening with AI is kind of worrying, really, right? The centralization around these providers, the amount of power they're going to hold, political power, when they kind of train these models themselves on whatever data they want to. We don't really know what data they train on. We don't even know when we're interacting with these models, if it's really the output from these models. So that kind of aspect is worrying, right? And that's kind of the opposite of DePIN, right? Putting all this power into centralized places. So yeah, I hope we can make a shift against that, that kind of change to more decentralized AI, putting the power like in the edge in consumers' hands on their devices, doing more on-device AI machine learning. I think that will help DePIN networks as well. I think they go hand in hand. So yeah, I just want to see the world tend towards a more decentralized future rather than centralized, and DePIN's a big part of that.
Yeah, wrapping up, I think DePIN is really good for solving big problems, and obviously like robotics, AI, that's kind of the obvious big problem in the space. So DePIN, I think they tackle this capital intensive problem, and to IOSG, we think like the biggest problem here under the tailwind of AI, there are two. The one is electricity. Building the new electricity grid, the power plant is super expensive. How we can leverage the existing human electricity to kind of provide the flexibility to offset a little bit about this electricity market. And then another side is like agent. They're consuming too much token, right? You always hit the limits of cloud code. So how to make sure the inference can be cheaper, especially this year, more and more capable models, they are smaller. They can run on cheaper devices. So I think DePIN can leverage on top of that. Yeah, that's my take. And thank you guys for joining the panel, and hope all the audience got something here. Oh, question? Oh, wait, we don't have question. We got the time. Yeah, thank you guys.